Hi there, welcome to Nappy Invest. Back in 2018, cannabis companies on the ASX were all the rage, but that hype, that FOMO in marijuana faded away over the past 5 years. And in fact, some of the company's share prices have fallen upwards of 99%. Now, one of my biggest faults as an investor is sometimes I am a little bit too early to the figurative party. So I'm not talking about literal, I'm talking about figuratively. So sometimes I see a potential theme, a potential growth area in the future, and I jump in way too early, and then nothing happens for years. And then finally, after I've sold out, because I've become a little bit too impatient, we see that hype. And maybe the same thing happened to the market. The market was a little bit too early when it came to cannabis companies back in 2018, because right now, in June 2023, there are things to like about quite a few marijuana or cannabis companies on the ASX, including the company I'll be featuring in today's video, ECS Botanics. There are many ways right now to play the marijuana or cannabis story on the ASX. You could find a company that is completely vertically integrated, a company that is growing or cultivating the marijuana and then turning that marijuana into products and then selling, distributing that marijuana around the country or maybe the world. Or you can find a company like ECS that is focused on a particular part of the process. So ECS Botanics is a manufacturer and cultivator of marijuana. So they own farms across, I think it's Victoria and Tasmania, that grows marijuana. Right now, probably the biggest success story when it comes to cannabis companies on the ASX is Vitura. This is a company that is focused on selling and distributing marijuana or cannabis products. And that company is not only profitable, the company is providing a dividend to their shareholders. So right now, Vitura is showing you can be a successful cannabis company on the ASX. And it seems like ECS Botanics is moving down that path right now. Now let's have a look at some simple facts in regards to ECS Botanics. This company founded in February 2018, and 2018 was the year to be a cannabis company on the ASX. And it didn't take long for ECS to list on the ASX. Now, back when they list on the ASX, this company had zero revenue. They weren't selling anything. They might have been growing their products, but they were not creating any revenue at that point in time. And they listed on the ASX July 2019 via Access Technology. So this was a backdoor listing. Now, there is a bit of skin in the game when it comes to ECS Botanics. So there is going to be investors that will look at that quite favorably. The current managing director is Nan Marie Scurry, and she owns 9.5% of the company. The other largest shareholder of this company is the founder, Alex Keach. Now, when I did have a look at their prospectus when they listed in July 2018, it mentioned that Alex Keach was the proposed managing director, but he also owns 9.1% of the company. So combined, the managing director and the founder own almost 20% of ECS Botanics. So definitely skin in the game when it comes to this company. Now, when I prepared this video, it was a few weeks ago, and the share price then was 1.9 cents, which means with 1.1 billion shares on issue, the market cap of this company was $19 million. Now, the whole motivating force for me doing or recording the video today is because the company came out of a trading halt in regards to two pretty significant contracts they have won. And I'll talk about this announcement later in the video. And right now, at about 2 p.m. on June the 26th, the share price has increased to 2.3 cents, which means the market cap is around about $24 million. So not too high when you look at the revenue and receipts growth. And when you take into account the contract the company has just, or the contracts the company have just won. And the ticker for this company is an obvious ECS. Now, I mentioned in the previous slide that the catalyst for me doing today or recording today's video was an announcement the company has released on June 26th. But the real catalyst, the initial catalyst for me doing a video on ECS Botanics was their March quarter results in financial year 23. So before we have a look at the March quarter results in financial year 23, let's go back 1 year ago just to see how this company has grown over the past year. So 1 year ago, receipts of 1.2 million, receipts of 3.8 million for the first 9 months of the year. And the company was operating cash flow negative, $1.6 million for the quarter and $3.3 million for the year. And a fairly big concern was the cash burn of this company. So cash on hand actually fell $2.3 million and was $4.8 million at the end of this particular quarter, because the company also spent $1.4 million on property, plant, and equipment, or that is sometimes referred to as capital expenditure. But as we take a look at the March quarter results for financial year 23, you'll see a significant growth in their receipts. So receipts for the quarter up to $4.4 million. So receipts in the last quarter were greater than the first 9 months of financial year 22. I believe that's correct. Have a look. Yep. Not only was it greater by about $600,000. And year to date, receipts up to $10.8 million. And they are turning that growth into receipts by improving the bottom line. So even though the company is not yet operating cash flow positive, they are moving in that direction. Operating cash flow negative by only $470,000 in the quarter and only $759,000 for the first 9 months of the year. Now, they are still burning through cash in operations. They spent $515,000 on capital expenditure, which means that cash on hand fell from $2.9 million to $2.1 million. So things are moving in the right direction. And if you take a look at what they're doing with their spending, you'll notice that product manufacturing went up $1.7 million, but staff costs plus administration costs only grew by a little amount, only $350,000. So it does seem like this company is finding a little bit of scale. And if they can continue to grow their receipts and maintain a nice control on their spending, it does look like this company can become operating cash flow positive fairly soon and free cash flow positive soon after that. One of the impressive things about ECS Botanics is their growth in receipts since they listed on the ASX. And I've already mentioned they had no revenue when they went through that backdoor listing of Access Technology. And I know that because they mentioned it in their prospectus. They have no revenue. In fact, in their first Appendix 4C as a listed company on the ASX, they had $10,000 of receipts. That's the September quarter of 2019. And then receipts grew fairly slowly over the next 18 months or so. And then receipts took off from the March quarter 2021. And in fact, in the last 2 years, receipts for this company have grown from $180,000 to $4.4 million. And in the past year, receipts have grown from $1.2 million to $4.4 million. So that is probably the most impressive thing about ECS Botanics right now, is just the growth in receipts. So what we need to see as an individual investor and what the market needs to see overall is this company can sort of translate this growth of receipts into profit and cash flow. Now to the secondary catalyst for me doing today's video, and that is the announcement the company did release to the market on June the 26th, securing 2 binding offtake agreements worth at least $11.9 million. That's a very important word, at least. So this is the lower end of the possibilities for this company to supply medicinal cannabis dried flower. So the 2 contracts with Melbourne-based Entura, a minimum of $10.2 million over a 3-year period. And the other contract or binding offtake agreement is with Precision Pharmaceuticals for an estimated $1.7 million over 12 months reviewed annually. So this will significantly increase their receipts and revenue, particularly when you compare it to the receipts this company has received over the past 9 months. Now to the charts, and the first chart here is the weekly chart, going back to when the company listed on the ASX through that backdoor listing in 2019. Just forget the moving averages, because there was another company back before 2016 that had the ticker code ECS, and that is included in TradingView. But you could argue that ECS Botanics probably listed just after the top of the cannabis hype phase on the ASX, but the share price hasn't been as significantly affected by the wane in hype in cannabis as other companies. Share price of this company hasn't fallen 99%. In fact, when they did backdoor onto the ASX, the share price was around about 7.5 cents. And then the share price did fall to a low of 1.5 cents in the start of 2020 during the COVID-19 financial panic. And then there was a nice bounce in the share price late in 2020, start of 2021. You can see that in the volume as well. Share price increased with increasing volume, and that was a good sign, perhaps, for ECS Botanics. But then that little hype phase faded away for this company. Share price went back up to 7.5 cents, which was the old highs we saw when the company did list on the ASX. And then the share price just started to meander lower, and it's just been going lower ever since then. Share price did fall back to 1.5 cents in June of last year, the bottom of the market. So you could say, because the share price has dropped to 1.5 cents 3 times in the past, that's a flaw on the share price of this company. But the share price of ECS Botanics, even after this positive announcement, and we'll look at the daily chart in the next slide, the share price of this company is still in a long-term downtrend. There was a little bit of interest in this company when the company did release this contract news, or this offtake agreement news, and that was translated to an increase in the share price. Share price at one point on June 26 was up 30%, but a little bit of selling. And the reason it has been a little bit of selling was because the share price has been higher than this over the past year. In fact, the last time the share price was this high at 2.3 to 2.6 cents was back in March of this year. So there is a little bit of resistance. Some shareholders who have bought in the past have seen the share price fall and have decided they have to sell out of this dog stock. So that is resistance right now the company is facing when it comes to the share price. But the company keeps releasing these sort of announcements. If the company can release a really good June quarter, becoming operating cash flow positive or even free cash flow positive, I think that can be the catalyst and the inflection point for this company. And you can't say this company is overvalued right now at about a market cap of $23 million. So I definitely will be putting ECS Botanics onto my watch list for a potential turnaround in the future. That's all I have for this introduction to ECS Botanics, a cannabis company on the ASX that is growing, or has grown quite nicely over the past 2 years. Receipts have grown from about $150,000 to $4.4 million per quarter. Whether the company can keep growing at those rates remains to be seen, but the company is close to being operating cash flow and free cash flow positive. And if they can become operating cash flow and free cash flow positive and become profitable, this company is looking interesting with a markup cap of about $23 million. If you have any questions about ECS Botanics, maybe you're a shareholder of this company and you know a little bit more than I do, I'd love to hear your opinions, your insights on this company. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this company, for this video. Have a good day. Bye.